In this next video, we're going to review the importance of fundamental news and the impact news events can have in the currency market. First, let's take a look at this chart. Here we have a Euro USD monthly chart, which brings us all the way back to 2008. Now you can see we have the highest level for the euro, which is 160.00, and the lowest level on the left hand side of 124.00. That's a huge drop in price for any currency. What happened that made the price move down from being at such a high level? Well, it was the breakdown of the financial markets in 2008. Now you can see this is not something normal of 200-300 pips. Now we're talking about thousands of pips. But you can see after this dramatic event, the price did recover and start moving back up to 152.00. But take a look what happened after approximately November of 2009. The price dramatically dropped once again. What happened during this time that made the price move once again thousands of pips? It was the Greece problem. The Greece financial problem brought the euro from 152.00, which was the high at that time, all the way down to approximately 118.50. And you can see once again the euro did recover, moving back up to 142, where Ireland got into problems, and that forced the euro to move lower. Once again, we found a solution. Ireland started selling bonds, raising money, giving some relief to the market, which brought the euro all the way back up to 149.00. Now what happened during this time? Once again, Greece, with a little bit of Italy, to bring down the euro once again to 132.00. Eventually we started getting a little bit of breathing room, and the euro moved back up to 142.00 because Greece was going to receive the loan from the ECB, and that's what gave a little bit of relief to the euro. But once again you can see we started moving back down. Why? Well, Greece is not so much the problem anymore. It's Italy. And Italy might be a much bigger problem than Greece. Therefore, we feel that the euro should come back down and probably break the 118 level. But first we have to get down to the 132 level and start gradually moving its way down. Now, what are we trying to show you in this example? We're giving you this example because when you're trading short term and long term, there must be a reason why you feel that the euro should either go down in price or up in price. And a lot of this information comes across the wire through the media, and it's short-term events that could impact the currency market. For example, once Italy got into the mix when the euro was at 149, we can see that the price moved lower. What we're trying to point out is the fact that the currency market doesn't just drop in price for no reason. You could put all the support and resistance levels you want on a chart, but when there's an impact such as the Greece debt crisis or the collapse of Lehman Brothers, no one can ever anticipate 5, 10, 15,000 pips to come off the top and end up at 118.50 from 152, or from 160 all the way down to 124. But we have to understand that these events do impact the currency price. And if the news is bad enough, then we should be prepared to sell. But there's always going to be a solution. The markets, the government, they're always going to find a way to give some kind of relief to the market because that's their job. And you can see every time we dropped in price, the euro did recover. Thousands of points on the upside. Even after this dramatic event with Greece, we did recover, almost moving all the way back up to 152, all the way to 149. Then we got the problem with Greece and Italy, which brought it back down. And now we believe that in the next couple of months, Italy will have a bigger impact than Greece, which should bring down the euro below 129, maybe even 125 over the next couple of months. Now this is something that we have to be prepared for. But when you're trading, your job is to interpret this information as best as possible. So if we're looking at a long-term chart, which is a monthly chart, we need to understand and ask ourselves this question. Why do I believe that the euro will come down in price? Or why do I believe the euro will increase in price? Well, in November of 2011, there's almost no reasons why the euro should increase in value. On the day-to-day, we're going to have news reports like GDP, consumer confidence, retail sales, manufacturing, which will impact the price of the euro short term, depending on how positive the news comes out for that day or how negative the news comes out for that day. During the sessions, we will see an increase in price, but overall, you have to have an idea on a larger scale. Where do you believe the euro will be 3-4 months from today, and why? That's the most important question you have to ask yourself when you're doing research and when you're analyzing the market. So the key point of this example is to always understand the bigger picture. Why do you feel that over the next couple of months the price will increase or decrease in value? Don't look at the short-term point of view of what's going on with a currency. Always look at the long-term. Why is it important to look at the long-term? Look at the next video on how to place long-term trades, which we're going to go over in detail, and giving you a better explanation and why this is the start of the long-term trading. Asking yourself this question: where do I believe the currency I'm trading will be 3 to 4 months from today?